This is Moments with Fu with James Fu Torres, better known as Fu, the show that takes you around the world to share interviews with some of the most successful and relevant people on the planet, hear their stories, and get the most important business lessons they have learned on their road to success, and get exclusive advice on how to implement their success into your life and business. Moments with Fu is brought to you by the Strategic Advisor Board and your host, Fu.
Hello and welcome to Moments with Fu. I'm your host, James Fu Torres, but you can call me Fu, hence the name of the podcast. Today I have Aaron Chapman. He's a licensed mortgage originator that focuses on investors. And I'm going to let him tell you more about that. But first, Aaron, how are you?
Not too bad, man. How about yourself?
Doing good. Feeling very positive right now, very busy, but good things are happening. So I'm excited for that.
Yeah, and the busyness is definitely always something we enjoy, especially when you just got through the craziness of the market, things slowing down and coming back. And we love busy, but we love productive even more.
Exactly. So it's not about just busy work that is not taking you anywhere. It's about doing, being busy, being productive, right?
100%. There's a lot of people who will take busy as just being a really good thing because they don't have a whole lot of time to do stupid things. But sometimes you just got to pause and wait and find the productive thing. Don't burn that energy just because you need to burn the energy. Sometimes it's focusing it where it needs to be. And sometimes you have to pause and wait just a moment, but don't allow yourself to get preoccupied with something that's of zero value.
100% agree. I mean, it's just a matter of making sure that you're putting your energy and your time into the right things, right? And for that, you got to have alignment. You got to have clarity. And that's something that it's one of my biggest priorities. And obviously being able to take care of your body too, right? It's not like the mental is obviously super important, but then you have to take care of your body so you don't, you can be a high performer, right? So
we can go deep into that one, man. It's like taking care of yourself, taking care of your mind, where you focus at. Do you get caught up with weapons of mass distraction? Does this take you to Instagram and scroll all day long? We got major problem with where people go to certain websites that will suck you in for hours and that kind of stuff. I mean, we can go for days on that topic alone.
I love how you say a weapon of mass distraction. I'm actually gonna put this on my notes. Weapon of mass distraction. Because this is such a good term. I'm definitely gonna steal this from you.
Feel free. I stole it from somewhere else. I think there was actually I think there was a movie titled by that way back in like the early 90s or something to that effect. But we are living in that time of weapons of mass distraction. When you think back when they had that movie released talking about that, and now we're in a world where you can literally fill every second with things of zero value. I happen to stumble into a situation where this, I'll just throw it out here. You can cut it out if you want, but the website Pornhub, they publish their statistics every year. And when you start to discover that they have 6 to 7 billion hours per year logged on their website that people actually log in, you start to realize that we as a species are going backwards in evolution. We're losing productivity to the tune of 5,000 centuries of time every single year for the human race as a whole for one website. And that's not your Facebooks, your Instagrams, your people putting out things of zero value and just entertaining. The productivity has dropped significantly. So my goal for a lot of people is figure out how do you start your day and how do you stay as productive as possible. And I think it was said the study was done with productive CEOs. They are productive for maybe only 90 minutes to 120 minutes a day. That's it. The rest is distraction. So how do you expand that? How do you become the type of person who expands on that? That's going to take a lot of personal focus to get there. And I've been working on that for years. And I still get distracted as all hell. But my calendar, I will say my calendar is the greatest tool. It keeps me going every single day. When I look at that, I got to get this, I got to get this, I got to get this. And if I got a gap in there, I'm going to fit a couple of these other things in there and I'll keep going. My productivity is, 4 or 5 hours a day sometimes.
Yeah, no, I mean, I think we align on that too. Like I'm putting things in my calendar and having my assistant making sure that I'm putting things in my calendar. He's keeping me accountable, all these things. Say, hey, how that call went? Let me put that in the notes, all those things, right? So I can keep moving because I'm like, oh, I got this window of I don't have calls for 30 minutes. Let me work. Let me check the emails. Let me check stuff. Let me move things for clients, right? Like while I'm then on other calls, right? So I can agree with you on that. And that this is a great start to this podcast, let's say.
You hit something really important that a lot of people probably discount and probably listen to past. You mentioned your assistant. My assistant, Bree, who's the one who set this whole thing up. she knows the parameters of what makes me productive and what doesn't make me productive, and she'll sort through those, and she'll pick the most productive items for me and put those in there, or farm those out to other people on the team that can do just as good, if not better, in many cases. What we have done as humans is we know we are our worst enemy in many cases, in the sense that we can negotiate with ourselves to determine what we can do, whether or not we should or should not do that. We can talk ourselves into laying in bed. We can talk ourselves into taking that call we shouldn't. We can talk ourselves to getting involved in that one thing that we shouldn't ever do or waste our time or money on. And because we know what we'll accept as an excuse, or we know what things that we can negotiate ourselves into. But when you take somebody else and say, hey, here's what my day needs to look like, let them do the sorting. It keeps me from negotiating with myself to do something that's of zero value or lower value, when she can put me higher value opportunities in there. So you have the same thing. You have somebody who's charged with ensuring that you do not waste any time on something that's not going to be productive for you. And sometimes I'll call her up and say, I saw something come across. I'll peek into my email. I was like, well, I can do that. She goes, I got somebody else to handle that. You do this. So sometimes we do definitely sabotage ourselves. And that's something I think people need to learn to do, is charge others with your productivity, and don't get in there and sabotage yourself.
I completely agree. And for me, it's I got like OCD on certain things, and I caught myself like, multiple times in the past, and I still like, I know it's gonna happen. It's like I'm doing this stupid thing just because I thought about it, and I just like have this like, I need to finish this real quick and then I'll continue with this thing. And sometimes I'm like, why? Just because of like OCD that I need to finish this? No, like this is not bringing me anything. Like there's so much important things. So, and now the awareness is kind of like my point here, right? Is making sure that you have awareness and you're checking on yourself, because sometimes we accidentally, right, that we just don't realize it. So if you constantly like kind of ask yourself, this is what I do, I just ask myself like, do I really need to do this? Like, is this bringing me value? And I just make it automatically periodically, so that way if I accidentally got distracted and I didn't even notice that I shouldn't be doing that, then I just ask myself. So that's what I do. And definitely, making sure that the team is trained enough to be able to identify the opportunities, right? And like, is this a person that I should be taking a call with or not, or should I prioritize it over this, right? So that's one big thing. It's like getting my team to be able to identify those things. That's kind of where I'm going through right now, training them and being able to at least get 80% to the standard that I have, right? So that's my goal in here. So anyways, so one of the first questions that I like asking people is about advice or actionable tips for business leaders or investors, given that you're big into the investment side, and most of business owners, especially high level, they're investors because they gotta need to park their money somewhere, right, to for tax advantages and to get their money making money. So what are some actionable tips or advice that you have for business leaders?
Well, before I get into the advice and stuff, we'd mentioned as we started, I'm a licensed loan originator. I've been doing this since 1997. So as I speak to people, it comes from a perspective of a very, very long time, seeing cycles in the market, seeing where thousands of people, I do averaging about 1,200 transactions a year for the last few years. And so I get to see where thousands of people are making decisions in their business, where they're failing and where they're succeeding. So one of the actionable items that you're referencing here, I would say, is for everybody, quit trying to time the market. There's no such thing as timing the market. I look at that as like being a star football player on a championship team who wants to be on the highlight reel, but they want to have the most energy possible. So they sit on the sidelines, on the bench, and they watch intently what's going on so they can jump on just in time for that perfect play. Doesn't happen. The only people who are on the highlight reel already have their ass on the field. So that's what I explained to everybody. You want to determine where your role is on the field and get on the field and stay on the field. Sometimes it's not going to be the perfect play. Sometimes it's going to be a losing play. And sometimes is going to be that long bomb that goes right into the end zone, right? It's going to happen. You're going to be able to time that market, but it's because you're out there already. And then you're understanding it better. There's this other saying I like to say is good judgment comes from experience, and experience comes from bad judgment. Great way to learn on the grade school playground, not a good way to learn in real estate. Because of that, people come into things with not knowing what questions to ask, not knowing the real answer or the decisions to make when they're faced with things that they've never faced before. The benefit of having myself and picking the right people on your team is you can come to us and we can give you practical data where we've seen other people businesses succeed and fail. and you can make decisions with practical data, not speculation and theory. I never answer a question with a direct yes or no. I answer a question with a story. So you guys can see what other people have done. You can make a decision based upon experience, as if you experienced it yourself. So that's the first thing. Don't try and time the market, just get in the market. The other is understanding what your baselines are. What are you seeking to do? Everybody wants to be able to close their eyes, throw the ball in a championship game, get it to go right through the hoop, right there at the buzzer, and win, and be the guy on the that's talked about forever about the most amazing shot possible, right? Everybody wants that, but it doesn't work that way, right? You have to be content with small passes, or if you're a football guy, just a couple of good runs to get you some, a first down, or bunting and getting on base. You got to be right with doing the little acts, those little tiny acts that are safe will get you to where you want to go. Sure, you're not going to get there overnight. But how many people get there overnight? It's the deep, hard swings that people end up putting themselves financially in financial devastation, where one out of every several hundred million of those actually accomplish something. Problem is, we only hear about those. The news doesn't talk about the greatest passer in the NBA that just drops the ball to somebody else all the time but never gets a bucket. They don't talk about that dude. But that dude is getting it done all the time. That team is successful because that guy's getting it done. Same thing. You can do that kind of thing, be very, very successful. Incremental growth. So if you understand where your baselines are with your business and you're out looking for that, you will find opportunities to make the big pass and get that big massive win, but it's not going to happen unless you're out there doing the little things. One of the other things that people are really, really worried about right now has a lot to do with the interest rate market. They're thinking the interest rate market is now what's killing their ability to make the income they're looking for. They're looking at the market right now as interest rates going up. When they're going to go back down? There's a lot of people speculating we're going to see rates come back down over the next year or so. Let me tell you guys, it's straight speculation. I have absolutely nothing but hope to go off of, and hope is not a business strategy. What I like to do is I have to go back and I have to look at everything's in great detail. The one thing that people like to say is we're going to get back to a normal market. And when they say that, they're meaning a normal market of 4% interest rates. That's not a normal market. If we go back to 1971 and we trace the 30-year fix from 1971 to today, the average interest rate is 7.75% for people buying houses to live in. Now, we've had a window of time from the crash of 2008 till 2022 where the Federal Reserve created capital. There's some people argue it is counterfeited capital, right? They just created this out of thin air without any real monetary backing to show a reason to create this capital, but they created it from the U.S. Treasury, filtered it through the Fed. The Fed went ahead and invested into mortgage-backed securities, all this money laying there to borrow against, and then people borrow on that. Because there was so much money, the price was very, very low. So when money is scarce, the price is very, very high. It's just like anything in economics. So I look at this inflation or deflation of the value of the dollar, either way you want to look at it, as something that we had for a short window. I don't see it coming back. So from 2009 up until 2022, the average interest rate was 4.03%. That was just during that window. Well, if they're not investing anymore, they're divesting from that. We're going back to what a normal market would have actually been from 1971 to 2009. That was when there was no Fed involvement. It was all the markets creating what was available for the people to borrow. That was an average interest rate of 9.12% for your average homeowner. So that means your average investor would have been somewhere in the range of probably 10 to 11% over the average of that period of time. For my career from 1997 up until the crash of 2008, the average investor is paying in the 7 to 8%. That's our normal market. So since that's our normal market, how do you approach the normal market and be successful as an investor? You approach it like a business. How often have we heard through our entire life that if you're going to start a business, be prepared to have 3 to 5 years worth of reserves to live while your business gets off the ground and it starts to cash flow, correct? That's what we've always heard. No business has ever been started to be cash flowing the next day. Now we've seen that happen, but that's not ever been the basis. Real estate's no different. If you're looking for the cash flow, 3 to 5 years before you start to really see the cash flow. How does that happen? We live in an inflationary environment. You're raising rents. Rents will come up slowly over time. And then but what's really cool is you get a 30-year fix. You fix your rate of cost for 30 years. So as your rate of cost is flat, your revenue continues to compound year over year. The real cool thing here about that is because we live in an inflationary environment, we raise rents because the dollar is losing its buying power. Well, if the dollar is losing its buying power and the lender doesn't get to raise the payment on that loan because of inflation, they're actually receiving less money every month. If we average out inflation for the last very, very long time, they're going to see about a 0.666% decline in the value of that dollar month over month. So if you borrowed 100,000, you paid it back over 30 years with $200,000. The value of that $200,000 is about $97,000. You're paying less than what you borrowed as you raise your rents and increase your income. Remember that, and live in, buy in places. If you're a single family investor or a duplex, triplex, fourplex investor, buy in places you can keep reasonably rented. The entire time you own it, you can raise rents. You do that, you're successful. The other success comes from the appreciation of the property, the fact that the tenant's paying it off, the fact that you get to write it off on your taxes. Those tax deductions get you to keep more money that's yours.
I think that's the biggest one, and especially on immediate, right? Like in my opinion, because the cash flow is just something like, you're building it, the equity and stuff like for the long game. But for now, like you want to get on real estate so you can write off as much as possible, right? And especially if you just cost rate segregation, right? You bring that a lot of that value up front, and that's like, you can save a lot of money in taxes while accumulating assets rather than just focus on that cash flow. I have one of my clients is a tax strategist, so like, I've been we're learning a lot about that.
That is a massive, massive piece of it that people discount significantly because they don't see it. It's not a tangible thing that comes into their bank account every month. Everybody sees what comes to their bank account. They don't see what they get, what they don't pay, right? So if you run that side by side, what you would have put out in the form of taxes versus what you don't have to put out now, that changes significantly. Your income can go up 10, 12% per year.
Especially if you're a high income earner.
Number out of my ass,
right?
I just pulled that number out of my head, but I've seen that quite often. So that alone is worth significant. When you think about that, 10 to 12%. The other thing is, as we're talking about the amortization of the loan, if you've got a tenant paying off the mortgage, like if you bought a house for $100,000, you invested $20,000 on your down payment, plus closing costs of say $6,000, so you're $26,000 in on this investment. You financed $80,000. Your tenant's paying off the $80,000. Over 30 years, you're going to pay an average of $2,666 per year. You divide that into your investment of $26,000. That's a 10.25% increase in your investment every single year. You're already making 10.25% just by somebody else paying off the note. Then you're increasing your income by whatever percentage because you get the taxes and you're not paying that to taxes, right? You get the tax deductions. You're not paying that into the government, which is just going to throw it away at nothing. And then you also get the appreciation, and then you also get to eventually get that compounding cash flow. So everywhere you look, investing in real estate is beneficial. It's just you have to know who you're working with more than anybody, and then you have to know what the realities are of the industry. What we're dealing with right now is a lot of people trying to convince others that if you want that cash flow, you got to get an ARM or a short-term loan. No, don't do that. We don't know where the market's going. Do you know who Charlie Munger is?
I think someone talked to me about him. I don't know if it was you in the last call, but yeah.
It could have been me in the last call. You know who Warren Buffett is, right?
Yeah.
Berkshire Hathaway. Okay, so Charlie Munger is his business partner. So Warren Buffett says, I'll quote both of these guys real quick here. Warren Buffett says that the 30-year fix is the greatest financial instrument in history because it's a one-way bet. If you're wrong and the rates go down, you just refinance. Big deal. But if you're right and the rates go up, you protect yourself significantly against erosion of your income and your family's wealth. Yeah. Now, Charlie Munger talks about how interest rates have gone down for the last 40 years. We just talked about 1971 up until 2009. And actually up until 2022, they've done nothing but decline. There is a belief from these guys, and these guys are the smartest some bitches out there, called oracles, right? They are talking about interest rates going up for the next 40 years. If that is the case, and right now our interest rates were lower than the average you and I just talked about, because I have the data sitting in front of me right on my screen, we're at the best interest rates that we will have for a very, very long time.
Wow. Like I gotta say, I'm not trying to brag, but just I took action when people told me like prices were so high in the houses. Like, what if they go down or blah, blah, blah. And I took an interest of when I bought my house, 2.75. That's what I got for interest. And I was like, look, I don't care if the house is like, You know, it's high, like it's interest, it's amazing. And then I refi then to like 2.25. So like that's my rate right now. And I'm like, damn, like I cannot let go because it's a 30 years fixed 2.25. I have a gold mine here, right? And I in a 3 bedroom, 2 bath, like I'm doing house hacking now too. I rented out like short terms, like for people in like one of my rooms. Sometimes people that I know, Puerto Ricans, friends and stuff. So that's something that I like. I've been taking advantage of that, and people were. Doesn't matter how good the market is, the bad and stuff. Like people are always gonna have a bad. Like, oh, prices are too high even though interests are low, or interests are too high even though the prices are low, or like there's always an argument to say that it's a bad time. There's also always an argument to say that it's a good time. So it's a matter of the deal, in my opinion, right? Like if does your numbers make sense? Are you taking educated decisions? Are you surrounding yourself with the right people? Like to make sure that you're just not gambling, you're literally taking a one-way bet, like you said, right? Just like you're putting it here, especially, I mean, like the devaluation of the dollar, right? And now with the things that just happened, with China, Russia, like the international trades moving away from the dollar and using like Chinese yen and all that, that's gonna have an impact too. I mean, we're losing
It's going
power
to
as an
create
economy.
it's
So
going to create a war is what's going to happen, because the only thing that's kept and this is just my anticipation from what everything we've seen, the only way the way that we have kept the US dollar as the reserve currency is by having military all over the planet, by being the strongest of all. But what we've been doing with this current administration is weakening our position when it comes to that, and then on top of that, really messing with the value of our dollars. And now you've got countries now saying, guess what? We're going to walk away from you. How are we going to combat that? We're also trying to not bring on any oil. We're trying to mess with that. It's, I don't know what's coming. I have no idea how it's going to work out. I don't know how it's going to be, but what I can tell you, if you lock in anything, you lock it for 30 and you secure that and you keep it that way. I've been doing this way too damn long to tell anybody anything else. And if anybody tells you different, you walk away from that some bitch as fast as you can, because they have no idea what they're talking about. Most of the people in my space right now have been in it a very short time. And if they're trying to tell you they have a ton of experience, there's guys out there right now trying to compete in my world saying, hey, we got 20 years experience. When in reality, they don't. They have 1 to 2, and their processors been doing it for 20 years. Processors are very important, very, very good people. I've got quite a few on my team that's very good at what they do, but they don't look at the markets. All they do is they analyze the paperwork. They analyze the data with respect to that borrower, not what's going on in the market. They're just pushing files forward and making sure that we have accurate, clean files for closing. They don't look at all this other stuff. They don't have the experience that we have on the front end working with investors. So if you're worried about whether or not the person you're talking to knows what the hell they're doing, look them up. You can go to the nationwide mortgage lending service, or licensing system, nationwide mortgage licensing system, NMLS. Go under consumer access, look up that person's name, and see how long they do it. There's a lot of people that are trying to take advantage of you just to put bread on their table, and I get it. It makes sense. We're all trying to eat, but not at your expense. Don't allow that to happen to you. Protect yourself. We are the apex predator, in my opinion. Well, not in my opinion, it's a fact. We fall prey to no other species except other humans, and these some bitches are preying on you.
yeah, I mean, unfortunately, I've been preyed on a couple of times, growing I haven't been in a business for not even 3 years. So, and I move fast. So I'm a fast action taker. I invest a lot. I go big or go home type stuff. Right. So I also been learning big lessons because of it. Right. And that's why it's so important for me. I've put on like kind of like filters now to do business certain ways and relationships certain ways to make sure that I don't get myself in situations, because it's life is hard as it is, and everybody's trying to like survive, and then some people go into either lying or doing certain things to just they're just trying to get that money, and they will say whatever they need to say to convince you, and that is something that I don't know how those people go to sleep at night, because I can't, like, even when the smallest things, I'm integrity first. For me, that's just a big thing for me. But yeah, just it's ugly out there. It's a jungle, concrete jungle, like people call it, right? It's a matter of like you gotta surround yourself with the right people. You gotta be prepared mentally, physically to really deal with what's out there. And if you want to get into real estate, like, do your due diligence and look for people that can really help, because real estate is such a good thing that everybody wants to do it, right? Regardless of what you do, and you should do it. To be honest, you should. I mean, it's one of the safest investments that you can do. Saving money is making money. That's something that I tell everybody, and I tell myself all the time. It's like, if I save $30,000, I made $30,000, right? Like, money that I didn't have to send to the government, money that I didn't spend on something, that I didn't lose on something. It's money that I made, right? I kept it on my pocket. I kept it as a resource. So that's a big thing that I tell people all the time here in this podcast, is just to protect yourself and learn from the mistakes. I tell a lot about my mistakes and the mistakes of other people that have come here as my guest. That look, it's ugly. Protect yourself. Hang out with the right people. And on that note, right, that we were talking about this on our previous call and a little bit off air, that I love that you're very big into ensuring that everyone wins in the real estate deal. So can you tell us a little bit about how do you go about that to ensure that everybody wins on a deal?
Well, for one, it's picking the people you work with, right? Making sure you're getting good, solid professionals that are in there for you to win, right? So if you want to make sure that everybody else wins, you got to be sure you're working with people that have the same thought process, because somebody ends up being taken advantage of if that's not the case.
Yeah, there's always the sucker on the deal, right? And that's not, that's something that that we got to be aware of. So that's why I asked you this question.
Yeah, a lot of times, I think it was the movie Rounders we talked about. It's like, if you can't spot the sucker in 5 minutes, you are the sucker. That's because in that movie they're talking about the poker table, right? Well, because you're sitting down at a place that's designed to exploit the sucker. But if you're in an environment where you're working with people, they're not trying to exploit the sucker, they're actually trying to build a person up to give them knowledge about things, and you have that type of a team, then you don't have to worry who the sucker is in the deal. So I don't disagree with people selling properties for full market value. They should be able to receive the value of what the asset that they're selling to you. I don't disagree with a property manager charging 8 to 10% of whatever the rents are to be able to do their job, provided they do their job, right? They have to do the job. And I don't mind a lender in our space who gives a reasonable interest rate, charge reasonable fees to have all the processing complete, because it is a major pain in the ass to do these deals. These deals are not easy. I have to pay a massive staff, I have to have massive overhead. We're always under scrutiny. I have to deal with compliance, I have to deal with legal to make sure that we can be sure that you get this extremely cheap money for 30 years and not have it blow up in your face, right? So you get all the right people in there. And the way that you ensure that, that I believe the people in the purchasing space, the investor space, benefit from that, is the one to recognize that everybody has to participate. Everybody has to do well in this. Everybody has to get their due. It's when you start trying to cut somebody somewhere else, they're going to end up cutting you, right? When they're always searching for that. The other thing that I find is also a good way to go about business, kind of like what we're talking about with trying to time the market, is don't think you can do it all. Too often people come in to say, hey, if I go out there and I hunt down the property on my own, I'll make X more money, right? But let's think about this. Let's just say you're a software engineer, and now you're going to go pick up a hammer and you're going to learn how to do drywall and put in carpet. That's not how you made your money. You stick with what got you there, which is being a software engineer. Other people got there by running hammers, right? By learning how to use a screw gun, by being able to do texture and tape on the wall, by being able to do carpet, be able to do plumbing. That's their forte. Pay them well to do their forte, do what they do, but make sure they do it right. So then you have to hire an inspector. That's his forte, to inspect it, to ensure it's all done correctly. If it's not done correctly, you go back to the guy who said he will do it correctly and make them do it correctly. As long as everybody does exactly what they're paid to do, you win. It's when somebody does not that you end up possibly becoming the sucker. So don't allow yourself to be the sucker. The thing that's beautiful about real estate is you can make a mistake in your first few years and you can feel it. But over the period of time, if you have held everybody accountable, even if you overpaid for one of those services, over time you will make up for it. You will be perfectly fine, but you never allow the work to get shortchanged. That's where you have to stay on top of it. I've had a lot of people will go into a contract on a property, get an appraisal, get a inspection, and both those reports tells them definitely do not buy this property. Well, what do? They buy it anyway because they spend $1,000 on appraisal. They spent $300 or $400 on inspection. Well, I'm already $1,500 in. I might as well just move forward. No, you paid for that to not get in it. That's why you bought it. So walk away from the $1,500 and move on to the next one. That is your safe. That's what keeps you safe. It's basically like somebody buying body armor, and you've got body armor to protect yourself. You go into a place and you take a bunch of fire and you just got blown up on your body armor. It's like you spent a bunch of money on this body armor. You don't just go and take it off now and go in there and get yourself killed, right? You're like, this one thing that protected me, this just told me I get the hell away from this. Same thing with the other. Just keep it on, get away, move on, move forward. That money is expensed for a reason.
I love it. I love it. That's why you did it in the first place, right? Don't lose sight of that. Like, it's just being smart with your money and being willing to, like, look, I spend this so I didn't lose 10x that, maybe, maybe, like, who knows, right?
You lose a lot more in the long haul if you purchase something you should have been purchasing. And then again, if you've got good people that you trust that continue to earn that trust, they have to keep earning the trust every deal. They continue to earn it and they continue to do right, then don't bust their balls about what they make on it. As long as it's fair, it's fair. This whole thing that, oh man, there's a lot of people that I know that use strategies that they'll push it right up to the very end of closing. All these people did their work, and then they'll want to know, well, you need to cut this or this or this, I'm going to walk away. That's a jerk off strategy. And that's a person who wants something that eventually the piper is going to come calling on that action, and it's due. And you've earned that ass whooping that's coming at you.
Yeah, I agree. And this is something that got me thinking about things that I talked with David A. Perez, which is like my tax study client that I was mentioning earlier. He is big into, look, just surround yourself with experts and do the thing that you can do the best, like have an active income. So don't be like, oh, I'm just gonna try to do everything to save here because I want to be property manager. I want to be I want to eliminate the realtor too, and like those fees, I can do it myself. I write this contracts, I write everything, right? You start doing all these things, and then you start like just spreading yourself too thin, rather than just do 1 to 3 things that that you can do really well, and that could be something completely unrelated to real estate, where you have a good active income that then you invest, or it could be surrounded by creating active income with real estate. But don't try to do everything, right? Just make sure that you can do, like, people. This is something Jason Miller, CEO Strategic Advisor Board and owner of actually this podcast, he told me, and he tells people all the time, that people really have like up to like 3 really like superpowers, right? So don't like, and it's okay to learn about different things so you have an idea when you're coming into deals, when you're having conversations, but stick to those superpowers. Like, really good at it, that, right? Like, just, you have a natural ability or a background or whatever, stick to that, make money that way, add value to the right people, surround yourself with people that complement you, and that's it. You don't have to do everything. And I know that it's hard. It's like, oh, nobody can do it as good as me, or blah, 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 right? Like, that's a common thing, but you need to learn how to let go, because even if your team can do 80% of the outcome that you can do, that's good. So you can liberate yourself to do high level tasks and other things, and create more income, so then you can invest more in real estate and do all these things, right? Like that's my advice, given on the things that you said. So
well, I agree with that. You maintain your superpowers and enhance your superpowers, but surround other people that have superpowers that complement yours. Don't go learn new ones. Just get people that have other great superpowers that makes you guys all one big powerful team.
Yeah, I agree. Yeah, great. Thanks. Thanks for sharing all the things that you shared. I mean, you went really deep into the why, right? Like in the analysis. So it's not just, I love how we're not just saying like, this is my advice and that's it, period. It was more like, look, there's data, there's experience, there's thing, like, this is it. This is not me just saying like, and you were like, look, I don't know the future, but I know how to study data. I know how to study history. I know how to study, like, kind of strategize. I'm an expert on being in this industry for long enough. And, you pay attention to things, you put 2 and 2 together, and you're like, oh, that's why you said like the things that you said. So I really, really like that. I think there's a lot of value in this podcast. So thank you for doing this. And I know there's going to be people that are going to be wanting to connect with you. So how can people find you?
Well, they can definitely go to my website, aaronchapman.com. But to the one point you're just making there, yes, we don't know the future, guys. Anybody who tries to claim to know the future, they're going off of hope. And hope is not a business strategy. We've said that already. I think I need to keep
I think I'm gonna make a note of that. Hope is not a business strategy. I think I'm gonna put that in my Facebook.
We can live hopeful. There's nothing wrong with living hopeful, but you don't want to set everything on straight hope, because if it doesn't work out, what happens? Right. So you go with what you know. What we do know is where things could go. We're preparing for that, but we prepare for it, but we hope it gets better. In worst case scenario, if it gets better and I'm wrong, we're still good. But if we go with the hope strategy and I'm right, you're completely screwed. That's the difference. Going my route and it gets better, we're still good. Going the other person's route and it goes the way I hope it doesn't, but I show it could, then you're completely screwed. You completely wiped yourself out.
You're kidding me, because unfortunately, I mean, I learned my lesson, but I have done that. Like, I have been like, oh, I'm hoping that this works, because there's no way that this person with this reputation is gonna risk or whatever. And I didn't trust my intuition and my doing deeper due diligence and stuff. I just kind of went with hope, and it cost me a lot of money. So by experience, I can tell you, do not go with hope. And that's why I'm gonna definitely be tweeting and putting this on Facebook. Hope is not a business strategy.
And you quote me on that one. That's an Aaron Chapman
I
statement.
I will definitely make sure that I'll tag you. You have Facebook, I'm guessing, right?
Yes, I have Facebook and Instagram. Yep.
Perfect.
And you guys check me out there. I'm definitely on Facebook, and go to Instagram on my Instagram handle, SGOC _ Aaron. You can, if you can't find me, just Google Aaron Chapman. There's no one bald bearded redneck lender out there.
I love it. And I'll make sure, like, as long as hopefully your assistant already gave all the information to my assistant, right? Like, because in the form that I sent, I'm pretty sure, like, I saw it come in, and make sure, like, hopefully all those links are there, right? If not, then I'll get my assistant to, like, kind of ask. But because I'm gonna put it,
we'll get it to you.
I'm gonna put them all in the description, to make sure that people can connect with you. And I need to connect with you, to be honest. I don't know where I haven't connected with you yet, but we'll make sure that I connect. So thank you for doing this. I'm definitely gonna tag you on that and push this when it comes out. So thank you again for taking this time. And I hope that we can do more stuff together.
Well, I look forward to it. I appreciate you allowing me the time to bend your ear and those of your listeners. So you guys take care.
Yeah. So this was Aaron Chapman and Fu, and this is us signing off.
Thanks for listening to Moments with Fu with your host, Fu. Please leave your feedback and visit strategicadvisorboard.com to get the latest and greatest business advisement on the planet. Follow us on social media for updates, and we will see you on the next episode.